That was Nvidia CEO Jensen Huang with his outlook on the quantum computing timeline. Shares of Nvidia actually rebounding slightly this morning after sliding more than 6% yesterday. By the way, what he said about quantum computing managed to take out a lot of those quantum computing stocks, some of the smaller ones like IonQ, Quantum Computing, Rigetti. Joining us right now for more on all of this is Joseph Moore. He's Morgan Stanley semiconductor analyst. And Joe, I just want to get your take on this. I've been reading a lot of stuff. I mean, after Jensen Huang made his comments the night before last, we actually saw shares a little higher in the morning. Maybe not by a lot, but it certainly wasn't giving back the pullback that we saw later in the day. There were a lot of the tech stocks and other big high flyers that pulled back, though, after we got stronger than expected jobs numbers, just in terms of what the BLS had in terms of jobs openings, those JOLTS numbers. That had people suspecting that maybe the Fed is going to be more reluctant to cut rates anytime soon. And that caused all of these big high flyers to pull back. So do you think the pullback in Nvidia's shares yesterday was more related to what Jensen Huang did or didn't say, or just more related to the overall idea of watching the Federal Reserve and seeing how the economy is doing?
I mean, I think both of those play a role. I think there were also very high expectations around the keynote at CES. And, you know, CES is a trade show oriented around consumer and automotive. And there were some really important developments that came out of the keynote around those markets. But data center is 85% of the revenue. And I think, you know, there may have been expectations that people wanted to hear more about that. So I think you have some of those issues. But, you know, overall, this is still a company in a very strong product cycle. And data center wasn't the focus here. It's investor focus, but, you know, it's still very strong. So I think it's a combination of some of the market issues that you talked about, as well as maybe some expectations issues around the trade show. But there was really nothing negative to take away from it.
Yeah, what could he say in terms of the data center that the street would really like to hear? I know that the revenue is expected for the year, the fiscal year that ends this month, to come in at $113 billion, ramping all the way up to north of $200 billion by the fiscal year that ends in January of 2027. What do people want to hear on that front?
Well, you know, expectations are high. I think we're 2 months into the Blackwell cycle, the new products that they just started shipping. So I think to think that we were going to get any color on, you know, GB300 or incremental Blackwell products was probably just not going to happen. This wasn't the forum for that anyway. And I think so from a product standpoint, I think we know everything that we need to know. From a revenue standpoint, you're facing a little bit of a transition here, that you have Blackwell demand is very good. And you've heard these comments from Jensen in the past on CNBC talking about, you know, the level of Blackwell demand being insane. And he didn't really repeat those comments. But I think the issue that you're dealing with is Blackwell demand is really strong, but it's supply constrained. And Hopper, the sort of legacy product, still is the largest portion of that data center business. And so I think we'll still have a couple quarters here where there's meaningful upside. But I think the real upside is kind of into the back half of the year when you start getting that kind of full-blown Blackwell ramp. So I think, you know, people would like to hear that. And I think they did hear that in some sense. But I think, you know, they're trying to avoid those kind of really strong statements about Blackwell because it's not the main driver of the quarter. I think that's the combination of Blackwell and Hopper. So still quite optimistic about how this plays out. But I certainly see the upside being stronger in the second half of the year.
I mean, I guess the question is, with the stock that has done so well, tripled in value last year, how much of this is priced in, how much isn't? Where are you telling people? What's a price target that makes you feel comfortable? Yeah. What's a price arena?
Yeah, well, you know, at some point, this is less about the sort of phenomenon that this stock has been and a little bit more on valuing a growth company on its growth prospects, right? And stock trades at about 29 times our estimate for calendar 26. That would be high if there were any kind of deceleration in the business. But I don't think there is, even when we sort of go through these transitional challenges, if you will. Challenges, maybe overstating it. As you move through these transitional issues, you're still beating and raising. Those numbers are still quite likely to be moving higher. So I still think the stock is reasonably valued with good growth prospects this year and beyond. And again, the data points that support that are the strength in the Blackwell demand. And I think it's going to take a while for supply to catch up to that.